5 I's of investing. IRA. Index fund. Irrevocable trusts. Interest rates. Individual retirement accounts, IRAs, are retirement savings accounts with tax advantages. Money held in an IRA usually can't be withdrawn before age 59.5 without incurring a hefty tax penalty of 10% of the amount withdrawn. Inverted yield curve occurs when short-term debt instruments have higher yields than long-term instruments of the same credit risk profile. Index fund is a portfolio of stocks or bonds designed to mimic the composition and performance of a financial market index. Index funds have lower expenses and fees than actively managed funds. Irrevocable trusts cannot be modified, amended, or terminated without permission from the grantor's beneficiaries or by court order. Interest rate is the amount charged on top of the principal by a lender to a borrower for the use of assets. An interest rate also applies to the amount earned at a bank or credit union from a deposit account. Thanks for watching. Please like, subscribe. Stocks 5150. Stocks are crazy.